morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Asian markets are off to a negative start after a strong jobs report in the US reduced prospects of the Federal Reserve cutting interest rates. Deutsche Bank will exit its equities business in an $8.3 billion overhaul that will see the lender slash close to 18,000 jobs by 2022. Mindtree's CEO Rosso Ravanan, Chairman Krishna Kumar Natarajan and Vice Chairman N.S. Parthasarathy have resigned after L&T acquired controlling stake in the company. Auto major Maruti Suzuki has cut production for the fifth month in a row as sales fail to pick up. And Team India beat Sri Lanka by 7 wickets in their last league game to finish in the #1 spot. The men in blue will now face New Zealand in the semi-final on Tuesday. Let's talk about the action on Wall Street first. Benchmark indices ended the trading week on a negative note after a strong jobs report dampened the prospects of a Fed rate cut. Treasury yields rose as well. Ranita Young of Bloomberg News gets you the highlights in this report.
U.S. equities fell from record highs on Friday, with the S&P 500 paring a weekly gain to end about 1.6% higher on the week. This all happening after a better-than-expected jobs report really did cloud the case for the U.S. Federal Reserve to cut rates, and it showed that the economy is still on track to fare well. Now, this also showed that June jobs report had a surprise to the upside, where we saw hiring rebounding, as well as countering that recent weak manufacturing data. Treasury yields also rose, and WTI, which was lower during the session, actually rebounded later during the end. And we also saw gold tumbling and the U.S. dollar higher, probably pressuring a lot of dollar-traded commodities. Meanwhile, we did see quite a few sectors among the biggest losers. We saw the industrial sector, which had among the biggest laggards, GM and 3G. And that's a look at your Friday Wall Street action in New York. I'm Ranita Young for Bloomberg News.
All right, let's take a look at the Asian markets now. Rosalind Chin is joining us live from the Hong Kong studios. Good morning, Rosalind. How's it looking? Positive jobs data weighing on the markets this morning?
Indeed it is. So we have most of the Asian stock markets here, the major markets, trading lower this morning. Most investors, I think, analysts re-looking at their outlook for Fed cuts after the stronger than expected US numbers, which came out on Friday. We did see that Treasury yields jumped. So a lot of the markets here trading lower right now. One of the markets, though, leading the losses here, Kospi in South Korea, that is down by 1.62%. It's really still reeling from those Japanese export restrictions which were imposed on July the 4th. That is going to restrict a lot of the components and the items needed to support the South Korean tech sector. So that includes things to make semiconductors and also computer displays. And there's also news that Donald Trump is opposed to South Korea resuming economic cooperation with the North for now. He wants to see a more firmer footing in terms of North Korean denuclearization first. So those things affecting the Korean market at the moment. In Japan, we had some machine orders coming out earlier today, down sharply in May, falling for the first time since January, and at a faster pace than expected. Now, core machinery orders are considered to be a leading indicator, so it does cast some doubt over what will be happening in terms of capital expenditure in the months to come. China opened lower just a few moments ago, Hang Seng down 1.65%, Shanghai Composite down by more than 1%, and also the CSI 300 down by about a similar amount. And in Australia, the S&P ASX 200, that is losing nearly 1%, and that is led by companies like BHP and other resources companies after iron ore prices plummeted. And quickly, the lira, which fell more than 3%, that is in Turkey, the Turkish lira. That's after, of course, President Erdogan forced out the central bank governor there, saying that he makes it clear, effectively, that he expects policymakers to follow his view on what interest rates do, and that is that high interest rates cause inflation, which, of course, is contradictory to what many economists think. There is a central bank meeting in Turkey on the 25th of July. So a lot of geopolitical uncertainty there roiling the markets. We've also got in the UK, Boris Johnson leading the pack, or leading rather the the race to become the next UK Prime Minister, with Jeremy Hunt the other possible option, and the Conservative Party members will vote on that today. And of course, Greece has a new government headed by Kyriakos Mitsotakis. So lots of movement there in the geopolitical world, adding uncertainty there for a lot of investors. Back to you.
Thanks so much for that, Rosalind. Now, President Donald Trump has taken his Fed bashing to the next level, saying that the biggest problem that the US are facing currently is the Fed and that they have no clue what they are doing. Now, prospects of the Fed cutting rates sharply in July hit another roadblock in the form of the strong jobs data that came in on Friday. Kathleen Hayes of Bloomberg News brings you more.
It's interesting because he started it on Friday when he was taking off to get ready for the big 4th of July Independence Day celebration on Saturday. He ended up on Sunday. He just couldn't quit. You can see him greeting the crowds as he was talking to reporters on Friday. He said the Fed doesn't have a clue about how to remove policy, doesn't know what it is doing. He said if the Fed knew what it was doing, it would be cutting rates by now. He also tweeting out today, Fed is our most difficult problem, not our overseas competitors. They've raised rates too soon and they've raised them too often. So what do we think got Donald Trump going again? Well, I think it could have something to do with that jobs report that you just mentioned, Sherry, that the jobs rate rose 224,000 from a revised 72,000 in May. They're back on track to show solid gains, even manufacturing jobs growing at a time when people think that there's a trade war. How could manufacturers, how could factories be running like that? So you can see the yellow line in this upper chart portion of the chart, that's a 3-month moving average. That tall blue line at the far right-hand side, that's the 224,000 gain. But what has this done? Well, let's move on to our next chart. These stronger gains in jobs, this rebound, suggesting there's not suddenly a big slowdown. That line moving up on the far right-hand side, the bets on rate cuts are just not what they were. They are starting to come down just a bit because people are thinking, hey, a 50 basis point rate cut is now off the table. And those people who weren't even looking for a rate cut in June may be gaining a bit of an upper hand. That could push any kind of rate cut out possibly until September. Jay Powell testifying this week to Congress is certainly going to be asked questions about this. So we'll see if he fires up that Trump tweeting engine again.
All right, sticking with international news, there are protests, as you know, happening in Hong Kong, where the police arrested 5 protesters who had marched to one of the island's major tourist destinations. The police have been under fire over the excessive use of force against the thousands of protesters who have taken to the streets against the controversial extradition bill. Karen Lee of Bloomberg News brings you more.
This was a bit different than what we've seen in weeks past. The protesters yesterday wanted to take their message to mainland tourists, so they marched through one of the busiest tourist and shopping areas in Hong Kong over on the Kowloon side, and tens of thousands of them came out. It was a bit bigger than we expected, and it really shows kind of the nature of these protests and the momentum that they have and how it's gone on much longer than people originally thought it might go. And they walked from the shopping district to the West Kowloon railway station, which has high-speed rail to China, and they wanted to take their message to mainlanders and really let them know what was going on.
So how have police been treating the demonstrators during this latest protest?
Police have been using different methods. They have come under a lot of fire internationally for using excessive force, and that became a key demand of protesters, looking into the use of that force and what they call police abuses. And in the aftermath of that, over the past few weeks, police have scaled back their presence a bit. When demonstrators stormed Ledgeco last week, we saw really very little police presence for most of the night. But yesterday they came out late at night in an effort to disperse the protesters who remained, and that did follow a pattern that we've seen where maybe the police presence is a bit lighter when more people are out, stands back a bit more, but then comes out in force right at the end to try and get rid of people at the end of the night.
All right, let's turn back to India now. Agam Vakil is joining me to tell you all about the trade setup for the day and also what's happening in the futures and options space. Agam, seemingly across the globe, at least in the Asian markets, there's a bit of uncertainty about Fed policy, and therefore there's, after that jobs data, a little bit of a muted start. How are we looking in India? I think a lot of cues from the budget would have already been priced in.
Absolutely, you're spot on, Alex. We don't have a lot of triggers in the domestic market, so it will be about global cues. Let's talk about the SGX Nifty then, and of course we do have the Asian peers bearing down on the SGX Nifty, which indicates that there's a likelihood that the Nifty could very well open in the red. To what extent is something that will be answered in a couple of hours. But for now, we did see a little bit of weakness after the budget announcement coming through for the indices. A little more weakness coming in as far as the mid-cap and the small-cap indices are concerned, and the banking indices, however, did see a little bit of an advance. Of course, some positives to take away as far as the banking index is concerned. But moving on, let's talk about your ADRs. And again, we do have, declines for Vedanta, Wipro, HDFC Bank, and Tata Motors, all of them losing out anywhere between 1 to 3.5%. Marginal movements for ICICI Bank, Infosys, and Dr. Reddy's. As far as your FIs and DI flow is concerned, we haven't seen too much, considering on a net basis, FI is sold against stock worth around 89 crores. This is hardly anything, and of course 275 crores worth of buying coming through DII. So at the end of the day, we haven't seen too much in gross numbers, and neither has that translated anything as far as your net numbers go. Now on in terms of contributions, we do have the likes of TCS, Reliance Industries, Infosys bearing down on the indices, but the selling was broad-based. As you can see, 96 other points were contributed by the others beyond the top 4 or 5 companies. As far as the futures and options space is concerned, again, very little has happened. We haven't seen too many traders take positions. I reckon it is from here on that we will start seeing traders perhaps start nibbling into the futures and options segment. As far as the Nifty banking futures go, again, the picture is not very different, even though we do see about 4% added in open interest. We'll be watching out for that. Do remember that Bank Nifty closed flat last Friday. But moving on, we do have your open interest distribution, and we're looking at a 500-point range, which hasn't changed. We have seen the Nifty move within. In fact, it's currently banging between 11,500 on the lower end and 12,000 on the upper end. So watch out for these levels. In terms of change in open interest, of course, considering the Nifty came off, we did see a little more writing around the higher level calls, which will include something like 12,000 and 12,100 calls, and that was again on expected lines. But coming down to your WIX, and that of course is crucial. Now, not only did we see the WIX come off in the 4 days preceding the union budget presentation, but we also saw it after that. So, we are going into, a relatively consolidating period, considering we've seen a fall in WIX. Moving on, let's also talk about your put call ratio that's come off to a very, very neutral level of 1. Can we move upwards from here? That's the question a lot of traders will ask. And as far as your stocks are concerned, the One Housing Finance and Reliance Capital remain in the F&O ban. And in terms of others, we're keeping an eye on Strides Shasun, Max Financial, and NIT Technologies, which are all seeing an increase in open interest. I might add that Mindtree may see a little bit of a reaction, considering its top management has resigned from their post, even though a lot of this was already in the news and has been reported in the last 1 week. And in terms of unwinding, we're watching out for DLF, ACC, and Bank of India. Again, Alex, it'll be stock specific. On the benchmark, we're likely to see a little bit of come up, but we're going to have to wait and watch as to how the global cues bear on Indian markets.
Absolutely. Thanks so much for that, Agam. All right, let's have a look at what's making headlines across the globe. Selina Wang of Bloomberg News brings you the first word headlines.
Top White House economic advisor Larry Kudlow says he expects U.S.-China trade talks to be back on track soon. The two sides haven't held face-to-face negotiations since mid-May, although senior officials have resumed talks on the phone. President Trump and his Chinese counterpart Xi Jinping have agreed to revive contact when they met at the G20 last week. The U.S. has held off imposing extra tariffs for the time being.
They're on the phone. the leaders, the senior people on both sides, Liu He from China, Ambassador Lighthizer, Secretary Mnuchin for the USA. They'll be on the phone. They've been on the phone. They'll be on the phone this coming week. I think a face-to-face meeting is in the cards. I don't want to get ahead of that story.
Iran has officially breached agreed limits on uranium enrichment in response to what Tehran says is Europe's failure to live up to the terms of the deal. The government says it will resume purifying uranium beyond the percentage accepted in the 2015 nuclear accord, heaping pressure on European leaders who signed the deal but are struggling to deliver relief from U.S. sanctions. Fund manager Jeffrey Epstein is due to appear in court in Manhattan on Monday after being arrested at the weekend and charged with the sex trafficking of minors. In 2008, Epstein served 13 months in a Florida state prison after pleading guilty to 2 counts of soliciting a prostitute. He avoided being tried for federal sex trafficking offenses in a non-prosecution deal. Mobile news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Selena Wang, and this is Bloomberg.
All right, the last 4 years have led to recoveries worth over 3 lakh crore in the public sector banks. That's the word coming in from Rajiv Kumar, India's Financial Services Secretary. Speaking to Uni Krishnan of Bloomberg News, Kumar said that the additional 70,000 crore rupees recapitalization that was announced in the budget will act as growth capital for public sector banks. Listen in.
If you see the last 4 years, what is happening? It is a very, very transformational shift towards the clean credit, responsible credit. What has it resulted into? The NPAs are reducing. Whatever was hidden has been transparently recognized. Asset quality is far, far superior. NPAs have actually, after peaking, have started coming down. In last year itself, it has come down by 1 lakh crore. In last 4 years, recoveries are around 4 lakh crores. Even public sector banks have recovered more than 3 lakh crores. Because of all this, the PCR is at its peak. So the asset quality is very good. And as you said, they are not leading the growth. The growth is already 13.2%. So it's not that they are not leading the growth. But the extra capital is now to equip them to give the necessary impetus to achieve what he has been suggesting and what is required to fulfill the dream and vision of the Prime Minister of a 5 trillion economy. There are various components to this. As he has already mentioned about the startup and all. It's not only 5 trillion, it's also inclusive. It's corporate. It's also equally important that it is financially inclusive, and in which NBFCs and HFCs have a great role to play. So here I would like to distinguish around, say, in 3 kinds of NBFCs. One, which have serious asset liability mismatch. One, which are growing and very, very sound, have no problem. Third, which are sound, but still have a little problem because of the over-risk awareness. So now we have done 3 very, very fundamental things. One, the regulation of the HFCs we have introduced, Madam has introduced today. Through the finance bill, we are transferring the regulation to RBI from the National Housing Bank. That's a one regulatory side big thing. Second, on the NBFC side, there was a lighter kind of a regulatory regime because of which it all happened. And one must remember when it happened. When banks were going through the cleaning, there was a growth here. And it happened that it also had the same kind of asset liability mismatch which banks had. So it is the turn of NBFCs to get cleaned up and be responsible. Therefore, the powers to the RBI have been proposed to be given through finance bill, which also includes power for resolution. So they can amalgamate, they can split, they can remove board of directors, they can appoint administrators. So this is on the regulatory side. Now, on the liquidity side, as on date, there is a surplus liquidity in the market. But today, the Honorable FM announced that only on the healthy pool and only of the healthy sound NBFCs, government will give a guarantee of up to 10%, which was immediately responded to, thankfully, by the RBI, which has opened up additional window of 1 lakh, around close to 1,04,000 crores. So all those which are sound
So this is
NBFCs,
specifically for NBFCs.
for NBFCs, HFCs, so which are sound, they should not face any problem either from the banking side in terms of refinance, or if they need little bit of help in short term, to even roll over their assets for giving them the additional liquidity. So banking, NBFCs, HFCs, all three are extremely crucial. One for all kinds of lending from bank responsibly, one through HFCs and NBFCs for the last mile delivery. There is also a great opportunity for both of them working together. You know, when they are refinancing, they can also become partners. So this is a big, one is trying to handle it from both the points. Strict regulation, responsible behavior, but no constraint on the capital side or the liquidity side.
All right, one of the other big announcements made during the budget was India's borrowing, which is and part of which will be done overseas in foreign currency. Now, Economic Affairs Secretary Subhash Chandra Garg says that the government is confident of doing the issuance at the best possible price available. Listen in.
One is, what is the right size for the sovereign issues to be done in the foreign markets? So we have studied some of the issues. The sovereigns typically have made the issuance between $1 billion to $5 billion, and not more than 2 issues a year, right? So depending upon where do you put your money initially, you can decide that this is the right kind of the market. Suppose it is, let us say, $5 billion. So $5 billion gives you 35,000 crores, right? 35,000 crores would be only 5% of our annual borrowing program. So one, we have to take into account what is the right kind of demand which we satisfy for the foreign markets. Second, we need to take into account what proportion of our borrowing we should put into the foreign borrowing route. That exercise has to be very carefully done, and we will do it soon.
And here I would like to bring you in. A lot of Latin American countries did enter the bond market, and a lot of their funding was for their borrowing was to meet spending on consumption. As the expenditure secretary, would you hold the Economic Affairs to task that if you borrow abroad, it should be for asset building investments and not for revenue expenditure?
Basically, intention should be that only. As it is basically primarily for that. It's a revenue expenditure. I don't think it will be also the thinking will be like that. So I don't see any that kind of an issue.
The Latin American example and the mistakes they made.
Latin Americans actually had gone too early into this business. They were not also careful. They had allowed sub-sovereigns to borrow in the foreign markets. So I think they suffered for that. So we have to be careful about it, but then there are many other who have raised foreign bonds and have survived very well and have found this. So that is what, when I was referring to, you have to figure out what is the right kind of the size, what is the right kind of market to issue, composition. But linking it to any particular expenditure formally in the system is not possible. Because if you link the raising of bonds to a specific expenditure, that would then mean that you have to raise it for only that expenditure. We do it, by the way, through sub-sovereigns. So when Exim Bank raises bonds abroad, they raise it for a specific purpose, which is capital purpose basically, right? So government pre-earmarking is very difficult to do it. So, but that aspect also need to be. But intentionally,
I'm just asking because some of the India watchers are really concerned about whether it will be a reckless kind of a.
Of course not. I hope you don't mean to say that domestic borrowing is reckless.
No, I know some bit of it is, because a lot of our balance sheet is into revenue expenditure. So
quite right, but the way the government has been managing its fiscal expenditure as well as the borrowing program, I think India has an extremely prudent manager of its borrowing.
And in terms of, have you done some sort of studies as to what is the appetite for Indian paper?
We did, and I think we found that there is a lot of appetite, and we should expect to rate very fine prices. Yeah. So one of the best prices which are available.
All right, the government has budgeted for 1.05 lakh crore as the disinvestment target for the current financial year. And one of the sources that can help them achieve that target is the strategic divestment of their stake in Air India. Disinvestment Secretary Atanu Chakraborty has told Bloomberg Quint post the budget announcement that an outright sale of the national carrier is certainly possible. Listen in.
Well, we didn't actually burn our fingers in that sense, because in doing a strategic sale, there's a certain amount of a learning curve even for an individual company. And well, there were certain lessons learned, and we have factored them. There was also a macroeconomic environment at that time in terms of crude oil prices, which were behaving in a very volatile fashion, and exchange rate volatility, both of which affect the aviation market in a big way. And that's why the last year effort then had to be abated at that point and retaken, and then elections came in, and this is a big ticket sale. We couldn't have taken it up during election time. We could have taken a smaller company, but not a big company like this. Therefore, this is a opportune time, and we have delayed it a bit till the accounts are ready, and then will be ready for the takeoff. No doubt that certain lessons learned, and we have again got back into certain amount of dialogue with the buyers, but environment is certainly more conducive.
I mean, this time around, because the government has spelled out an intent to open up aviation sector further in terms of FDI, does that also help? Because it seems like an outright sale seems to be more possible, seems to be a possibility than government remaining a 24%
We never wanted
partner.
to be a factor holding into that, because perhaps at that point of time it was felt that government will give a reassurance. If the bidders feel that they don't need that reassurance, government is in any case in for a strategic disinvestment. If we are giving up control and everything, our holding 24% frankly was more to reassure the party that they may feel like to be reassured that a sale would take place. Otherwise, however, on this decision is yet to be taken. However, this is not a, as they say, deal breaker.
But this time around, does an outright sale look like a possibility?
Certainly a possibility. Certainly a possibility. Certainly a possibility.
All right, but what are foreign investors making of the budget announcements as a whole? Listen in to two of them that we spoke to on Friday afternoon.
Well, the overall liberalisation move, both as far as bonds and equity is concerned, is very welcome. For the budget as a whole, standing back, it looks like a good balance between fiscal rectitude and necessary stimulus. And looking at the what's been happening with interest rates anyway, you've got some monetary stimulus, and then you've got some fiscal stimulus, some more spending coming through in infrastructure, a little bit more help to SMEs in tax. So it looks like a good balance, I say. The growth rate is slowing, and the overall valuation is on the high side. So it's not the most attractive from that perspective. But it still has better growth prospects long term than many other areas of the world, and it still has a government which is stable and wanting to stimulate that growth further with a really clear plan to be able to do that. And a mandate to be able to do it. So I think there is, in a medium term, a lot of potential. I think in the short term, the valuations are relatively high.
What stood out for me were 5 things. 4 were good and 1 was bad. So the 4 good ones were the sovereign offshore bond, which is very good, given that external debt is something like only 5% of GDP in India. And that'll create a yield curve, which the country doesn't have now. And then the housing finance companies falling directly under the jurisdiction of the RBI, I think will create more stricter oversight, which is a good thing for the NBFC sector. And then the government committing to put 70 how much was it? 70,000 crores, I think, into the banking sector, recapitalizing the banks. Undoubtedly a good thing. Free float increasing up to 35%. I take it as a positive. I don't think it's good to have a lot of stocks trading on a stock market that have thin liquidity. The only thing that soured the mood, and it explains why the Nifty's down, is that they're taxing the super rich even more. And of course, markets don't like taxation. But 4 out of 5 is a good number, so broadly positive.
Now, the government will provide a short-term partial credit guarantee for pooled assets of non-banking financial companies. This will help tide over the liquidity crunch for the short term, according to Sanjeev Bajaj of Bajaj Finserv. However, he said that a permanent solution to this issue is needed, as this is not a temporary problem. Listen in.
NBFC liquidity issue is not really an issue of one particular company or a temporary issue. It is a recognition of the fact that a third of incremental credit that goes into the market in developing an economy last 5 years has been extended by the top 10 NBFCs, 15 NBFCs in the country. But they don't have the same kind of liquidity support that RBI provides banks. And this is what needs to change. So the government has introduced temporary support from banks, and I think that will help in at least the current slowdown from the NBFC side due to liquidity. It will help improve that, but we need a more permanent solution from RBI.
Okay. But Sanjeev, I'm presuming you should be happy, because one of the things that she emphasized, that good quality NBFCs shouldn't suffer, and this whole purchase of the high rated pool assets, 1 lakh crores, one time, first loss, backstop being given, all of that should augur positively.
So as I said, as you know, that backstop is for 6 months. Right. So it will help in restarting, as I said, the current liquidity slowdown. And with respect to good quality NBFCs, actually the good quality NBFCs, like my own, aren't suffering. We continue to grow in very much the same way. Look at HDFC, so is it. But we are talking over here of the largest sector and the importance of this sector for the economy. And of course, it's very clear that the top 20, 30 NBFCs need to put stronger measures in place so that they can emulate the top few. But that's on our own internal side as an industry. We also need the government and the RBI to provide the same kind of support to this sector for it to grow and support the economy, because it's a very important proponent of economic growth over the last 5 years, and definitely more going on.
Another big announcement in this year's budget was the increase in public shareholding in listed companies, or the move to from 25% to 35%. So what does corporate India think of that proposal? Listen in.
We did a quick back of the envelope calculation, Menika. Companies that currently have 75% ownership, promoter ownership, whether the promoter is an Indian promoter or a foreign company, the current market cap of these companies is approximately 40 lakh crores. So 10% will effectively mean about 4 lakh crores of additional paper coming to the market. The first question is, does the market have the ability to absorb it? And the answer to that is, I'm sure the regulator is going to be very, very sensible. SEBI has always been very sensitive to not overloading the market. And therefore, if it's built on an adequate time frame, I think given the current interest, particularly by FPIs in the domestic market, I think there is enough appetite to be able to absorb that new paper that is likely to come to the market. Second question is, how do multinationals feel about it? Multinationals anyway don't like listed companies. They were holding on to 75%. Now they have to decide and dilute themselves to 65%. I would say at one level they won't like it, but at the other level, there is a element of speculation that's built in every single multinational stock on whether the company will remain listed or remain unlisted. Now there will be a decisive action. If the company wants to remain listed, it will bring its ownership down to 65%. If the company wants to use this as an opportunity to delist itself, because otherwise it's only going to become more expensive, then this is the time to do it. And with the new delisting rules being fully incorporated, I would say this is as good a time. I'm not saying it's necessarily cheap, but this is as good a time to exercise that decision and remove the speculation from the marketplace. I'm sure Indian promoters, etc., some may not be concerned about it, some may be unhappy about this dilution. But what it does do is improves India's position because of liquidity on the MSCI index, as we heard today. You know, and you know, we do know that there are some very, very good companies. You know, and if more paper from those companies comes into the market, there is enough capital. Currently the money goes there and it's inflating the prices, but once there is greater supply, I think you know, the prices and the prices will stabilize because the demand and supply will find a fairer position to stabilize at. So I would say, you know, still don't know why government did it, why government wants to do 75 to 65. Can't guess why government wanted to do it as a part of the budget, because normally SEBI regulations are introduced as a part of discussion at the SEBI board meeting. But you know, there are merits and demerits like in everything else.
Yeah, fair enough. The first time when they did the 25% thing, I can't remember if it was first mentioned by the government in a budget or in some other forum, but it came from the government, and it was then SEBI and Mr. UK Sinha, who was then the head of SEBI, who spearheaded that and you know, created a regulation around it and gave companies 3 years. Mr. Shankar Raman, as if you didn't have enough pain points today, I'm going to add one more. I believe that L&T shareholding in L&T Technology Services and L&T Infotech is 75% and above. So in fact, if this minimum public shareholding norm does expand or increase, then it will be incumbent on you all to reduce your stake.
Well, if regulations demand that, I think we have to comply. But as Ashok was mentioning, I think we'll have to look at it as an opportunity to make the stock more popular and more available to the market. And hopefully the value creation will help compensate the dilution, even if it is regulation-led. So I suppose we are not looking at it as a very significant negative. We do have listed companies where we hold less than 75%. So that's fine by us. But I do expect that SEBI would give its time frame so that there is not an abrupt release of supply of these stocks into the market.
All right, we've already spoken about several sectors, but there are some stocks that you still need to know about ahead of trade. Mishika Parak is joining in to tell you about the stocks in news. Morning, Mishika. What's on your list today?
Good morning, Alex. There are a number of stocks that we need to look at today. The first one being Mindtree. Rostho Ravnan has resigned from the post of CEO and Managing Director. So has Krishna Kumar Natarajan from the post of Executive Chairman, and NS Parthasarthi from the post of Executive Vice Chairman and Chief Operating Officer. Now, these three executives will continue to stay on board as board members and employees till the 17th of July. Then we have some downgrades made by CARE Ratings. They've downgraded non-commercial debentures of Edelweiss Financial Services worth 284 crore rupees to CARE AA- from CARE AA. The rating revision takes into account the increasing risk averseness in the market towards the NBFC sector. And for Reliance Capital, CARE Ratings has revised its rating outlook to credit watch with negative implications on long-term debt program, market-linked debentures and subordinated debt worth 21,000 crore rupees. PricewaterhouseCoopers has resigned as statutory auditor for HT Media and Hindustan Media Ventures with effect from July 5th. HT Media stated that it is desirous of having a single auditor for all the listed companies. Then we have a bulk deal. Eastbridge Capital Master Fund acquired 16 lakh shares, which is 0.8% of Natco Pharma at 528 rupees each. And lastly, Government of Andhra Pradesh terminates 2 contracts for Indian Hume Pipe worth 702 crore rupees. Now, these projects were related to the construction of drinking water supply projects, and the termination is due to change in the policy of the government.
Thanks so much for that, Mishika. Let's talk about some of the stories you'll find on the website BloombergQuint.com. First up, the Indian government plans to raise as much as $10 billion from its first overseas sovereign bond because there's huge appetite for its debt in the foreign market, according to Economic Affairs Secretary Subhash Chandra Garg. He added in an interview with Bloomberg that the government would make a cautious beginning, with the overseas bond not exceeding 10 to 15% of total borrowing, which amounts to $10 billion. And area sown under Kharif crops was down by 27% at 234 lakh hectares, likely on account of the deficient monsoons so far. However, sowing is expected to pick up this month as the Indian Meteorological Department has projected good rains in July and in August. That's all you need to know going into trade today, but there's a lot more coming up in just a short while. So do stay tuned. This is Bloomberg Quint.